As you rightly pointed out, it's a tactical constructive, so to speak, for the Indian markets, and there is a reason for it, right? We relatively underperform. The Nifty is down 7% and usually underperform the EMs as well as the DMs. So let me put out some notes which came today morning. So first is on CLSA. CLSA says that this is a contra buy time. That's the big statement coming in from CLSA. They believe that the sentiment is so extremely bearish that it's time to add beta to the India portfolio. Now they run their own bull bear index. Now that has reached 91% bearish level. This is what the report says, that it's come to 91% bearish levels, and that's the reason why, barring few instances in 2008 and in 2020, they have seen such bearish instances 10 times in the last 15 years, and 9 out of 10 times it has proved to be a good entry point into this market. So while I said they're advising clients to add beta, so they've added a couple of names to their India portfolio. That includes names like Reliance, Hindalco, and IndusInd Bank, which have been the big underperformers starting this year, and they're replacing with Infosys, where they've taken an exit, as well as NTPC as well. So these two stocks have relatively outperformed as well. So that's a big call from CLSA. So on similar lines, even CITI has put out a note today morning, and they believe that the risk reward is turning favorable, and I'll tell you why. If you look at the numbers that they've put out, India has relatively underperformed this year. We are down 6-7% since the beginning of the year. If you compare to MSCI, India index, that has underperformed EM and DM both by almost 8% and 11% respectively. So we've seen a bit of underperformance, and valuations have turned attractive now. So CLSA note says that the valuations are now almost one standard deviation below the 5-year mean, and that actually turns out to be a good risk reward from an entry point of view. Even they run they have a sentiment indicator, and that is suggesting that it can give 1 year, at least mid returns in the next 1 year, and that has turned positive for the first time since June 2022. So again, the indicators are suggesting that because of the such bearishness, you might see a good entry and a bit of a tactical pullback rally. They have a Nifty target of 18,500 for March 2024. They've marginally cut down their multiples to 17.5 times, but still they are bullish from these levels. And even in their preferred list today, they've added two important stocks, which is Interglobe Aviation and GAIL. These are the two preferred stocks in the India portfolio of CITI. But the bottom line is, given the extreme pessimism and the sentiment for Indian markets, and the fact that we've relatively underperformed, many brokerages are now feeling that this is a time for a tactical buy, and CLSA is calling a contra buy time at these levels.